Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how investors are reacting as we make our way back to the new normal. And today we're going to discuss the economic trade-off of a weaker versus stronger lockdown. And Phil, it's great to have you with us as always. And it looks as if when we take first blush data, the New York Fed Weekly U.S. Economic Index is showing some signs of improvement.
Yeah, consistent with lots of data that we've been looking at, isn't it? Nothing seems to be getting worse than what we saw in sort of that March-April period. And some of the data is getting significantly better. We looked recently at car sales and home sales. They're really strong. We looked at vehicle traffic and congestion. It's recovered a lot. We've been looking at restaurant bookings and airlines, which are recovering more slowly, but are recovering. And even hours worked is sort of somewhere in between. So it looks like we've turned the corner. The question really is, to your point, are we turning the corner quickly or slowly? So are we going to get our swoosh or a V or something different in terms of how quickly we get back to fully normal?
Let's take a look at global COVID-19 cases where we are right now. It doesn't appear that the protests have had any impact on U.S. case. It's still very early to tell because of the incubation period, but there is a bit of a spike in the emerging markets, which is concerning to me because they don't necessarily have the healthcare infrastructure like we do.
Yeah, and I guess you're right. There's two completely different reasons to look at these charts. The US, we can see that the cases are still falling, not so steeply, which was your earlier point about having a quick crushing of the curve, but we are still seeing cases decline. Obviously, in America and specifically, we've had all of the protests, lots of people not socially distancing, yelling at each other. All the science says yelling and being close together, even outdoors, is a risky activity. So hopefully everyone's been wearing masks, and hopefully we don't have a new spread of the virus just because of the protests. But like you said, it's too early to tell. They've been going on for 9 or 10 days now, and that's typically the incubation period before people start to get sick and end up going off to get the tests and finding out whether they're positive or not. So from the US perspective, we're going to keep our eye on whether we get a spike because of the protests, as well as just because everyone's going back to work. Even in New York State, they're going back to work in the city next Monday for a lot of businesses. The global situation is completely different. So we had cases under control globally, and now we're seeing an acceleration over the last 2 or 3 weeks. And you're right, that acceleration is coming from the emerging markets. And in fact, if you look at the death rates, which are, remember, going to be 4 weeks after the cases start to spike, you're already seeing a lot of the deaths globally are coming through the emerging markets. Africa is starting to see an increase in cases and deaths. But Latin America is much bigger than the US and much bigger than the Europe in terms of contribution to total deaths globally. And the other thing, looking at that chart, is it's kind of shrunk back in like an hourglass shape a little. But given that we know the cases are spiking right now, we should actually see the death rate, sadly, getting back to record levels in probably the next 2 to 3 weeks globally. So if that's all going to come from emerging markets, you kind of get a perspective of what's to come just in terms of people dying in other countries.
And Phil, if we look at the next chart here, we're seeing the response that US and Sweden had, and now we are among the worst countries in terms of deaths per million, which is disappointing because we had less aggressive responses. Once you put it into perspective when it comes to social distancing. In fact, in your notes, it says the Swedish health minister wishes he had a mulligan to start over.
Yeah, not that I'm wishing I was playing golf right now, but you can kind of see that the countries that were more strict, well, you can't really see it in this chart, unfortunately, had the cases increase and then decrease quite quickly. And so we know from the Chinese data, within about 4 to 6 weeks, most of China was back to business. Wuhan was a little different. It took a good 2 or 3 months to reopen, but most of the places that had pretty strict lockdowns, New Zealand, Australia, are all getting back, and they started their cases around about the same time as us. So we are nowhere near putting schools back. We're still tentatively doing things like curbside shopping, and that's because we've resisted the urge to crush the curve, as people say, And we've let people sort of perpetuate the virus being contagious and slowly spreading and slowly prolonging what we're getting. And you can kind of think about the economic trade-off that we've had. We've potentially kept the economy running just a little bit less badly by doing that, but now we have to wait even longer to get everyone back to full speed because we still have a pretty high level of cases. We saw before, we're still seeing about 20,000 cases countrywide at the moment. We've still got a pretty high death rate, and you can see we're not really crushing that curve either. So that's the economic trade-off is if you don't crush the curve, then we're going to be in riskier situations for longer. And that we've seen even with Sweden, people's behavior changes. So even though Sweden didn't have to stay home from work, a lot of people did. And their GDP was affected just like everybody else's.
All right, and to wrap up here, as you point out, there is one casualty that we can discern for sure since the protests have started. And this is actually Trump's reelection bid. It's quite incredible. You can put odds on just about everything.
Yeah, including who's going to be vice president nominee for Biden. But this is kind of interesting because Trump's support has been so strong at the level sort of, marginal 50-50. But you can see Biden in the last couple of weeks has caught up and since the protests has passed Trump. So for the first time, he's in the lead now. And that's definitely going to make the next 5 months interesting. And it could make a little bit more volatility come back into the market in November and December too.
All right, Phil, thanks for joining me as always.
You're welcome, Jill.
And thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.